Welcome back, boys and girls. It's about that time of day again here, folks. Happy Thursday evening. Welcome back to our nightly newsletter. Today is the 20th of February 2014, and your nightly newsletter. Again, my name is Joseph James at School of Trade and SidewaysMarkets.com. Well, another day of OPEX. We talked about this yesterday. Wednesday was what? Wacky Wednesday. Today we call it Thirsty Thursday. The Thursday of OPEX. This should be as bad as it gets this week. And boy, yesterday was pretty wacky. Definitely Wacky Wednesday on Wednesday. Today was another day where, and we talked about this morning in the trade room, we had to stay patient because, as you can see here, crude flat as a board, Russell, gold, big winners today. They took a little bit of time to get going, but boy, if you were patient for them today, you were rewarded at the end of the session today. So big moves higher on gold and equities. Crude oil, a little bit stuck in the mud. Maybe it's having a difficult time turning over the engine, right? Maybe it ran out of gas today. Definitely felt like crude oil here this morning needed a little bit more pep in its step. Bottom line, though, had a very good day Thursday. Hope you guys did too. Today we're going to talk about in the newsletter, we'll talk about what happened today. We'll talk about what's happening tomorrow, OPEX Friday. And then before we finish up, I've got some charts to look at for you guys because we got a big opportunity tomorrow morning with options expiration right around the corner. First of all, again, another day of OPEX. This is the third week of the month. The third Friday of every 1 month is options expiration. Remember, every 3 months, the third week of every 3 months, that's quad witching. So we got one of those coming up next month. So the next time we talk about OPEX, I'm going to be sitting on a lounge chair somewhere sipping a Mai Tai on vacation. Now, well, I wish. I'll be right here working hard for my students. But this time next month, the third month of the year, January, February, March, this time next month, we'll have options expiring, but it's going to be a little bit different. It'll be quadruple witching, right, where all 4 asset classes expire. We'll talk more about that in 1 month's time, so stick around. But today was Thursday of OPEX. Remember, Wednesday and Thursday are going to be the big days where you're going to see the most amount of action courtesy of OPEX. And what I mean by that is put yourself in the shoes of a major asset manager. Let's say you've got $100 billion of other people's money, and you know that on Saturday options expire and the last day of trading is Friday. What are you going to do? You're probably not going to wait until Friday afternoon. You're going to start on Wednesday and Thursday. So Wednesday, Wacky Wednesday, is when we usually see the worst volatility, right? And that was definitely what happened yesterday. We talked about it yesterday. Today, Thursday of OPEX, we expect to see a little bit more of that, but it's usually a little bit more subdued because most of the work is done on Wednesday. That's exactly what happened today. As far as the markets go today, we continue to see equity markets jumping. There was some bad news on the schedule today, bad news out of China, bad news out of Europe. Disappointing news out of the U.S. this morning. Didn't seem to stop the Russell. Didn't seem to stop the equity markets from pushing higher. We continue to be bullish in the equities, even in the face of these very bearish reports. This is my definition of a bull market. You with me? When bad news is good news and when good news is good news, this is the definition of a bull market. So how do you know when the trend's over? You know the trend's going to be over when you go to the Little League practice, you show up at work tomorrow, you're hanging out at the DMV, you're getting your teeth cleaned, right? You're getting your hair cut, and guess what? You hear somebody else in the room talking about it, right? We call it the water cooler talk. So you know we're in for a bull market right now when bad news is still good news. And we're not quite at the bubble point yet, right, where things start to deteriorate. We're not quite at the point of exhaustion yet because, again, go get your hair cut this weekend. If you're sitting in the hair salon waiting for somebody to cut your hair and the guy next to you is talking to his wife saying, yeah, I got to buy some more stocks, then you know you're on the way out, right? That's when people like Warren Buffett, right, Jim Rogers, the smart long-term investors of our generation, that's when they start taking their profit off the top. We're not there yet, though. We're not there yet. Wait till you go take your dog to the vet and the vet says, so, have you seen the S&P lately? That's when you know you're in trouble, right? Then you want to start taking profit. Bottom line, though, is today, crude oil completely stuck in the mud. Can you see this chart here? I don't need a magnifying glass, guys. You can see it right from where you are. It is completely flat. Then, of course, you've got Russell over here. Russell you can see straight up. Gold, now gold took a little bit of time here, right? You can see gold up here. Gold took a little bit of time to get going. We had some big moves out of the news, came back, and then bam. And once again, if you were a student in my trade room this morning, what did I say? My exact words were, if today is anything like yesterday was, the big money's going to be made after lunch. So we told all the students in the trade room, be patient this morning. After lunch, though, that was apparently when all the volume came in and we made our big moves. So bullish moves on gold and Russell. Russell up 205 ticks today. Pretty big range, up just shy of 1%. Just below or just above the 1150 mark. Gold, 182 ticks today. Again, just shy of 1%. Now above that 1300. We're staying above that 1300 on gold. We can assume that the Russell, being an equity, is being pushed up because there's really no other game in town. Emerging markets, real estate, there's very little other options for you to invest your money right now. So most people are putting it in either gold or equities, and you can see that happening right now. Gold's a little bit of a conundrum. Gold's a little bit of a tricky one here because what's actually happening is people are assuming that this bad economic reports we're seeing, they're not taking into consideration the weather, because that's what's happening right now. It's amazing. Today we heard from the Philly Fed. We never get commentary from the Philly Fed. We never get anything else besides the number. Today it was the number, an asterisk, and at the bottom it said winter weather. Severe winter weather was noted from all the districts in this news. So clearly, gold is reacting to bad news and also to a little bit of currencies with the dollar. But gold is definitely reacting to that bad news, and since one of the only games in town, that's rising. Crude oil. Now, not very often that crude stumps me, but I'm sitting here going, all right, what are these guys waiting for right now? What are we waiting for here on crude? Crude's been sideways pretty much all week this week. And we know crude oil futures is like a little 6-year-old kid that just ate a bag of candy. It's going to happen sometime, right? That kid's going to go all over the place here soon. Something's coming on the black gold. Something's coming on the Texas T. Something's coming here. We can't seem to stay above 103. I could easily see us going to 110 here in just a split second. Or we get right back below 100 and we're back down to 85, 75, right? Once again, something's coming on crude. Only problem is, as a day trader, all I can do is show up every morning, find the patterns, and react. That's all I can do. I can't make it move. It doesn't make any sense to get upset or frustrated about it. It is what it is. So my plan is always the same. I try not to predict. I'm trying not to predict. I'll put together some projections for us every day. But it all comes down to tomorrow morning when I look at that chart and I see exactly what we're doing at that time. I've got certain things I look for, find the trend, right? Find the range, analyze the volume, find the pattern. That's all we can do. Today, though, we saw significant, sloppy, sluggish, low volume on crude. Blame it on the inventory report, possibly today at 11 o'clock. But I don't know, though, guys. Usually we get that inventory news and then we'll get the big move afterwards. Today it was just flat as a board. So I'm expecting something big out of you, crude, tomorrow or going to next week. Gold and Russell, boy, it's been fun. It has been a fun time trading these markets this week. A little bit sloppy because of OPEX. It's going to happen, all right? If this is your first time trading this week, be aware you're seeing the worst possible scenario right now. So that's the good news, all right? If you made money this week with us, you're trading through the worst time of the month you're going to see, all right? It's going to get a little bit worse this time next month. I'll give you guys a heads up. The third week of March is one of the most difficult times to trade out of the whole entire year. Okay, combine that with the last week of August. Okay, everyone's on vacation, summertime. Yeah, third week of March. We're not doing too bad though right now. How'd the news come out today? Overnight news last night. Remember I told you guys about news out of China and Europe? Both of those manufacturing numbers came out really low. This whole global economy right now is taking a pullback right now. They're kind of pumping the brakes right now. Very interesting. We were hitting all-time highs and everything end of 2013 and now 2014. It's a little bit of a pullback now. So manufacturing lower. Jobless claims today came out at 336. Flat, pretty much what they were expecting. This jobless claims number, just so you guys are aware, this week, this jobless claims number is what you're going to see the first week of March with that non-farm payroll report. So the fact that we didn't see jobless claims take a dip tells us that we're probably going to see another disappointing employment report, non-farm payrolls. When was it again? You guys know this. You should know this by now. Non-farm payrolls. It's one of the biggest news we get. It's easy. It's the first Friday of every month. Write that down. First Friday of every month, non-farm payrolls. And the third week of the month for jobless claims, that's a good sign of the sample data that'll be used in the following month's non-farm payroll report. So a little bit of a clue there. Philly Fed today came out dramatically lower. I mean, dramatically. Negative 6.3. They were expecting a positive 3.5. I mean, we're talking about night and day. Completely surprised everybody at 10 o'clock this morning. And what was amazing was, we never see this. The Philly Fed statement that came out shortly after the news came out, big, bold asterisk that listed severe winter weather. That means literally everyone is telling us now we've got to discount these news reports. Tell that to gold, though, because gold keeps going higher. Because at first glance, if you didn't know about the bad weather here for the past 60, 90 days, you, of course, wouldn't have any reason not to be buying gold. Crude inventories came out flat, a little bit bearish on the inventory. If you remember last night, we got a draw in inventories, which is bullish. Today we had an excess of inventories, which is bearish. So it kind of evened itself out here, and you can see here flat as a board on crude. So not a lot going on today besides OPEX and, of course, some big news events. I got some great stuff, though, here with this day in history. One of my favorite times in my newsletter, February 20th. Let's look back a few hundred years. 1792, my man George Washington establishes the first post office. This is the post office, by the way, that's almost out of business right now, right? Support your local post office. Send a letter to grandma. She'll thank you for it. It's amazing now in the world of emails and text messages, we actually look forward to that physical mail, right? It's amazing how things switch around on us. George Washington, 1792, right? 1792, first post office. In 1809, the Supreme Court rules the federal government has more power than the individual states. Remember the 16th Amendment, right? Taxation without representation. That was the thing here in the U.S. Our forefathers didn't want anybody to be able to tell us what we were doing. And at first, we were the separate states, but then obviously the federal government came in and the Supreme Court ruled in their favor and said, nope, the federal government in the U.S. has more power, right, than individual states. Tell that to states that have just recently legalized marijuana, right, gay marriage. This is big stuff. I can't wait till that makes it all the way out to California. I can't wait. Big change coming. And I completely endorse it every step of the way. February 20th, 1852. This is cool. This is cool, right? Talk about an opportunity to see how our country expanded. First train runs from Chicago to New York. It used to take months to ship something from New York City to what was then the West, right? Chicago. 1852. Now all of a sudden, in less than 1 week, you can be from New York to Chicago. Now I know right now that should take about 90 minutes in a jet plane, but that's huge, guys. That is huge. That was the first step in colonizing the West, right? I wouldn't even be here right now if it wasn't for that train. So 1962, John Glenn, another fine American, becomes the first American to orbit Earth. I'll tell you right now, I have a hard time going to the top of the Empire State Building. I don't do Ferris wheels. I don't do bungee jumping, right? Could you imagine being that high in the air? I don't think so. I think I'm going to keep being a day trader. I'll let other people be the astronauts out there. And then, of course, a little bit of Olympic history for you. 1998, this day in 1998, my girl Tara Lipinski, yours truly, she becomes the youngest female to ever win the singles, right, Olympic gold in figure skating. 15 years old. Could you imagine? Imagine being 15 years old. You can't even drive a car yet, and you're at the top of your industry. Boy, she has had a very decorated career at a very young age. And of course, tomorrow. Now that you know what happened today in history, what about tomorrow? We've got tomorrow's OPEX. Now, here's what's happening. Tomorrow morning, if you haven't managed your portfolio, if you haven't rolled over, remember what's happening on OPEX. 3 asset classes expire. So if you've got options on the table, they're expiring end of the day on Friday. So by Friday morning, this should already be done. So what's going to happen is Friday, OPEX Friday is a really interesting scenario. What you can expect is it to be slow in the early parts. But then once the end of the morning, 10:30, 10:40, 11 o'clock, okay, a.m. Eastern time, then you start getting the Oh my goodness, I forgot to do that, didn't I? Right? That's what happens. Now we get the, oh, Christmas, I forgot to do something, my boss is going to kill me, my client's going to kill me, fill in the blank. So what happens? You get these Hail Marys, right? Bottom line is, at the end of the week, at the end of the month, at the end of the quarter, at the end of the year, you know what happens. Human beings do crazy things. Remember when you were back in grade school and you forgot to study for the test? What do? You cram all night, you come in early the next day, you do crazy things to make sure you're ready for it out of desperation. So we will definitely be looking for short covering rallies, profit taking at the highs, after we get past 11 a.m. tomorrow morning, looking at those desperate traders either trying to get out of positions or into positions before those options expire, end of the day tomorrow. Tomorrow we've got some big news coming out of Europe. Retail sales start out at 4 o'clock in the morning, 4 a.m. Eastern time tomorrow. Retail sales in Europe. We got Italy, France, there's a bunch of countries reporting retail sales. Tomorrow, big for crude traders tomorrow. This might be our big break tomorrow. We've got CAD. Now, of course, the Canadian dollar, right? Canada, a very big energy industry in Canada. Russia, Canada, New Zealand, Australia, the US. These are all markets that have huge interest in crude oil, natural gas, right? Solar. These are big important news reports. So tomorrow morning, 8:30 retail sales from Canada. I'll be watching crude oil for that. Definitely watching crude whenever we have big news out of Canada. And then, of course, we got one measly news event. This wouldn't even be here if we didn't have a holiday this week. All right. So we got OPEX tomorrow. We got a 10 o'clock news report from existing home sales. I don't think we're going to be able to take a home sales or any housing news seriously for a while because, again, all this horrible winter weather, it's killing new home sales, existing home sales, pending home sales. So I have a funny feeling, just like a few years ago when we came out of that whole debacle with the whole housing market, crumbling, that was a full year. Nobody even cared about numbers out of the housing market. We're right back in that same situation once again here right now. So I don't expect to see much tomorrow out of that 10 o'clock news. I just don't think anybody cares about it right now. I think everybody's pretty much said, all right, well, come back to me in March, and then we'll take a look at the month of February news that we see for housing in the month of March. All righty? So don't say I didn't warn you. Tomorrow morning, be careful tomorrow morning early. It's going to be slow on OPEX Friday. I hope I'm wrong. I really do hope I'm wrong tomorrow, but I have a funny feeling it's going to be slow at the start. It's been a short holiday week. It's been a busy week, I'm sure, for many people. It'll be slow at the start, but look out. After that 10:30, 10:45, 11 o'clock, be ready for some volatility as we have those, oh my goodness, my boss is going to fire me trades, right? We get those desperate traders out there in the market. And be ready for news 4 o'clock, 8:30, and 10 o'clock tomorrow. All righty? Guys and gals, have yourself a fantastic weekend. If I don't see you guys tomorrow morning in our trade room, and you guys stick around though, because I've got some charts to look at today, and we got some pretty important clues leading into tomorrow's options expiration Friday. Don't quit on me now, guys. You stuck around this far. You can't die on me now. Let's keep going. All right, guys and gals, thanks for sticking around with me here this evening. It's a Thursday evening, and we're just about ready to get back on track here. Let me get this off my screen here. Want to remind you guys here, if you're here for the first time watching today, don't forget to join our free trial over at SchoolOfTrade.com. Again, head over to SchoolOfTrade.com, click on the free trial button. You will not be disappointed. Inside of your free trial is a who, what, where, when, and why about School of Trade. I've also got live recordings of our trade room, as well as an invitation for you to come join me trading with me one afternoon next week, right? It's part of our free trial. Also, don't forget to, excuse the ugly mug there, don't forget to, if you haven't registered for our newsletter yet, head on over to SchoolOfTrade.com or at SidewaysMarkets.com and make sure you register for our nightly newsletter. That way you'll get this video delivered into your email box around 8 o'clock Eastern Time, Monday through Thursday. Let's get started. Now, the first thing I'm going to do is I'm going to jump right into crude oil, our VIP chart here this evening. And here we have a market that is completely sideways. We've got a 2-day relationship, which is sideways. We've got a narrow range today. We closed in the middle, and the volume's in the middle. Now, you can see we're right around this big round number of 103. That's been the ceiling for us here this week so far. And when I zoom in on this, you can really see I've got volume here. I've got volume here. So pretty much we're looking right about this 102.80 area is apparently where we are stuck in the mud, right? Or, pardon the pun, but where we ran out of gas. So here on crude, basically what my plan is now, I get the prior week high below me right now. That prior week high is going to be a magnet. If we go below tomorrow morning, I'm looking for an opening print below 102.11. I'm looking to sell it off down to that prior week high, an opening print above 103.05, and I'm bullish, and we're looking for buying opportunities going higher. The biggest clue that we got today from crude was the volume. The volume just stuck right in the middle of that range. So this basically tells me that right now, we know for a fact that there is no one in clear control. If the volume was near the highs, I would say the buyers were in charge. If the volume was near the lows, I would say the sellers were in charge. But right now, though, we never made it outside the range. You can see here we opened up inside the range. We tested highs. We tried to go lower, couldn't go lower. And again, we just kind of sat here. So right now, we are completely in balance right now for crude oil. So what that means is that means that I don't have any long-term direction. So if I'm trading right now, I've got to use an overnight chart. Let's take a look. Moving forward from the VIP chart, here now is my anchor chart. And what do we see here? Now, I should also let you guys know that I've also posted all of the other charts on the blog below this video. So this is not the only chart I'm providing for you guys this evening. This is my 13 anchor. I also have the 34 anchor and the 21 anchor posted below this video, so make sure you guys check those out. As you can see, though, we get a couple key things here. First of all, I can see higher highs. I can see higher lows. This tells me we're bullish. We clearly have the buyers in charge in the long term. Even though we're pretty much stuck here in this range from 103.15 down to 102, right? You can see that range there on the anchor chart. Most important thing, though, right now is that we're green. Right? We're green. I get a green cloud. I'm above all the key moving averages. So I'm free to be a buyer right now. I'm not at a premium, right? I'm not at the highs. So I'm free right now to be a buyer right now. I would like to, of course, see price down towards the lows of the channel, or even better, we just barely missed that 102.24. If you recall, we gave you those levels earlier this week. Crude oil just barely missed that buy for me here at 102.24. So, sorry about that. So what I would do is if I can get into it, I'd love to buy this 102.24. That would be ideal. And then I'm going to use these targets overhead, 103.09, 103.27, 103.62, and 103.98. So those are my targets as we go higher. We also want to be aware that we have a top of a short-term channel and the top of a long-term channel. So don't try to hold that profit through the top of that channel. Take a portion of your profit off. If you're trading one contract, take your money, put it in the bank account, and keep on going. All right? Don't try to get too greedy because we're seeing some real sloppy personality. Now, as I always say in my trade room, let's be prepared if price goes higher, lower, or sideways. First of all, if price goes higher, I'm going to have to wait because if price goes higher right now, I don't want to buy directly into these resistance levels. So if price goes higher, it's okay. Wait for a higher high and then get on a pullback, right? Wait for price to come back at a discount. That's the most important thing I can tell you right now as a new trader. Do not buy at a premium. All right? Would you buy a new car after it was doubled in price? No. Would you buy a new car when it was discounted by 30%? Absolutely. So we want to, again, if price goes higher, I can trade it, but it's going to be a little bit less percentage there. You're not going to get as easy move. What I would rather do is go higher, new higher high, then wait for price to pull back at a discount. Now, I don't know what that level will be right now. So, but if you want me to give you that level, I can. Come join me tomorrow in my trade room, and I'd be happy to give you the updated analysis tomorrow morning. What if price goes sideways? If price goes sideways, I'm sitting on hands, right? If price goes sideways, I'm waiting. What if price goes lower? If price goes lower, I'm buying the 102.24, the 102.11. And again, I have my targets up top here waiting for me, 09, 27, 62s, and 98s. But what if price really goes lower? What if it really goes lower? Well, of course, I'm going to look for a buy here, but sometimes it doesn't give me a buy. If it goes through this, once I get below 102.11, now it's very important. All my students out there, this is the last of my moving averages, right? Get me below that, and what happens? The cloud turns to red. So now when I get below 102.11, you got it, getting ready for shorts, right? Selling on off here below that 102.11, looking for the short. And you can easily see here 101.09, that is last Friday's high, right? So that's the prior week. That's the high from the prior week. Okay, so we're above last week's high. That's going to be a nice big magnet for you, getting below that 102.11. So going higher right now on crude, a little bit sloppy, so be careful here overnight. Again, new higher high, wait for price to come back and buy a pullback. If we go lower, I'm buying 102.24. If I get below 102.11 though, I'm off at the race to the sell side. Let's keep moving. Now that I got my crude out of the way, let's go to the gold here. On the gold, boy, gold has been a very strange day. Look at this on gold. Now, last night's newsletter, I said if we open up below this level, we're going to sell off. But we didn't. Right? So many of you are probably saying, caught you, JJ. You're not always right. But be careful. Remember, just getting the print below the low, I say this every time, it's not enough. What am I looking for? The first 15 minutes. So after I see that opening print was much lower than expected, I can't just jump in short, guys. I've got to wait 15 minutes and see what the actual personality is. Why? Because I want you to think about this. If we gap down at the open, that's usually because of traders in China, in Japan, in Australia, in London, in Germany, right? These are traders that are outside the US. So do you think it's possible that traders in Europe, traders in Asia, they may have a different opinion of value than traders in the US? Oh, you better believe it. Absolutely. Right? We are different people. We're different cultures. So overnight, that news out of China, that news out of Europe pushed prices lower. But when gold opens up here now at 8:20 a.m. on Thursday morning, clearly here the U.S. traders had a different opinion. So we gapped down into 8:20, but then, of course, we watched the first 15 minutes. There was absolutely no question at all that we were bullish. In fact, I bought at the open this morning on gold. We made a little bit of money that way. But the reality is, though, is that the 15 minutes after the opening bell told us we're not selling short. We quickly saw price fill the gap, right, all the way back up and close near the highs. So today we saw a lower two-day relationship, a relatively narrow range, a close at the high, and then if you look closely, you can see here the volume, I would say about 2/3 of the way up. So we're not totally bullish on gold, but we're definitely looking pretty bullish if you ask me there. And I would expect here going into tomorrow that we'll probably find ourselves somewhere around this 1320 area. Because you can see here, we had multiple days here back to back, and then we closed up near the highs. So tomorrow morning, opening print above 1318, I'm looking for buying opportunities. Opening print below 1311.1, I'm looking for selling opportunities. I could easily see prices going up to that 24.7, up to that 1329. Just like I could easily see it going lower down to that 1300. That's a big round number there at 1300. So now you know the story for tomorrow and the levels looking for tomorrow. Looking at the anchor chart. Now gold has a very interesting anchor chart right now. First of all, we got the previous week high. That's going to be our big Achilles heel right now. You can see we have been just stumbling around this prior week's high for the past 2.5 days. So this may end up being a sloppy day tomorrow if we can't get out of this prior week high area. Remember, dotted lines, right? Dotted lines. Anytime you see a dotted line on these charts, I'm sitting on hands. So right now, I'm right around a dotted line of the prior week high. Now, as you can see, though, we have a short-term move higher, but we have a long-term bearish channel. So what does this tell me? Well, this is actually a pretty good example of what I always tell my students in the trade room. If it's not screaming at you, if you can't easily tell who's in control, then that means nobody else can. And so you want to really be patient when you find yourself going, well, is it bullish? Is it bearish? No. As my good friend Jim Rogers said, we want to make trading so easy that all you're doing is walking over and picking up a bag of cash and going home. All right? Don't try to force markets that you don't know where they're going. Rule number one, know what you're doing before you do anything. So right now, we have a little bit of confusion. We get a short-term move higher, Looks bullish to me. But we have a longer term, as you can see, downward channel. So here's what I'm going to do. In the short term, I want to sell the highs, right? Because that's the way you trade a bearish channel. You sell the highs, right, of that channel. So right now, we are in a great spot to be selling short. And you can see here, I've run right into 1325 and 1327. So I'm going to be looking for, in the short term, a selling opportunity down into this 1315 area. Okay, now, I'll leave a runner. So what I would do is, if you sell short here this evening, take some profit off the 1318 area, leave a runner, though, down to this 1307. Okay, because that's the trade. The trade at the top of a bearish channel is to get it all the way back to the lows of that channel. So 1307, right, 1300, big round number. Wouldn't surprise me at all to see 1300 on our radar end of the day tomorrow if we get a nice big push off these highs. Another way to look at it would be if price goes even higher, don't be afraid to sell that 1327, 1329.5. Okay, don't be afraid to sell, okay, that 1332.4. Okay, again, this bearish channel that we're seeing right now. So I'm looking for a short. At the same time, though, there is a little bit of a lower percentage, but it's still a valid pattern. You still have a buy here at 1318, 1316, 1314. You can see I've given you all these levels here, 18.3, 16.6, 16.2, and 14.1. So those are going to be easy spots for us to be a buyer here right now because, as you can see, we'd be buying at a discounted price, right? We're not buying at a premium. If I was to buy up here, right, that's a premium. That's a discount. Okay, pretty simple, right? I want to buy at a discount, sell at a premium. So right now, I'm at a premium price. I would like to buy possibly after I sell short. So sell short down to the 18.3, take your profit. I would recommend you leave a runner down to that 1307, but it's up to you. And then again, if we start going higher from there, that's your sign now that the support is held, and we can pretty much guarantee we can use the profit targets overhead here as well. So these targets can not only be selling opportunities if we just go higher here, but they can also be great targets for you to use on the buy side here on gold. Moving on, over here to the mighty mini Russell. Boy, these equity markets have been fun to watch the past few months. No change here. Sideways range here on Russell, these big wide ranges. And boy, it's been so interesting because on Monday, or should I say Tuesday, Monday was a holiday. Tuesday, we go from bottom to top. Big monster range. Then Wednesday, top to bottom. And then here we are, Thursday, bottom to top, right? This is why when somebody tells me, how do you can't make money when the market's not trending. Oh, really? The Russell moves 300 ticks in one day. You mean we can't make any money off that? You're exactly right. I beg to differ. There is a lot of money to be made in these sideways ranges. Yeah, you're right. You're right. Everyone always reminds me, Joe, the market only trends 30% of the time. Well, if this is not trending, I'll take this all day long. Right, guys? Don't watch television, right? Watch the charts. You can't believe everything you see on TV, and I don't believe for a moment that we can't make money inside these ranges. So hopefully tomorrow we go all the way back down. Who cares? Do I need to see higher highs? No. Lower lows? I don't need them. All I need is the market to be moving tomorrow. That's all I need. We had a sideways day today, but you wouldn't have known it, right? Because it was such a wide range, up, down, up, right? Is it going to go back down tomorrow? Who knows? We'll wait and see. Somewhat typical range, not a huge range, pretty typical. We close at the highs, and again, volume in the middle. So very interesting here. We had volume at the highs, and then price went lower. We had volume at the lows, and price goes higher. Now here we are, volume in the middle. What's going to happen on OPEX Friday? Your guess is as good as mine. I really could care less, to be honest with you, as long as I'm not late to that trade. So we open above 62.6, and I'm bullish, looking for buys. We open up below 45.1. I am bearish, looking for sells. And of course, if you squeeze this thing up a little bit, you can see here I've got 1119.2.
this big, wide open space, just like on gold. If we drop off these highs, we could really see a bloodbath here quickly tomorrow on OPEX Friday. So, looking pretty good for tomorrow. Again, we've got our levels, sideways range here. I really don't care about the sideways range because we're making some good moves inside the range. If there's one thing tomorrow, though, that you've got to be careful about, it's this prior week high, this dotted blue line right here at 46.6. If we happen to get down to that 46.6, again, that dotted blue line, that's really the only thing on this chart that I can see you want to be paying attention to tomorrow. Because remember, anytime you see a dotted line, that tells me to sit on my hands. So be careful around the 46.6. It may not even be an issue tomorrow, right? So we'll have to wait and see. And then, of course, last but not least here, guys, last but not least, here's my anchor chart on the Russell. There is no question at all about what the plan is on the anchor chart of the Russell. We've got a bullish channel. And again, remember, I've got all the other charts posted below this video right now, so you should have no problem getting all the information you need. My number one priority right now is to follow this trend. I have an uptrend right now in the Russell. Pretty easy to see that. I've got higher highs. I've got higher lows. I've got a green cloud, and I'm above all the key moving averages. Now, with that said, I'm ready to buy right now, right? Certainly not. Why not? Why can't I buy right now? Who gets the star of the day today? Wonderful. I'm at a premium. I'm at a premium price. Don't buy at a premium. Would I go buy a brand new car at a premium? No way. I want to buy that car at a discount, right? I want that dealer to discount the car. So what I'm going to do now is I'm going to wait for price to come down at a discount and then look to buy it. You can pretty much discount this level here, 1160. So 1160 can be removed because it's already been broken. Now, the most important thing you can look for tomorrow is to get a buy down near these lows of this channel, right? Because that's the game, baby. We want to get into that low, and then I get a target up here at 62.6 and 64.1. As you can see, we've got a lot of different areas here to be a buyer. You might be able to slip a little sell here between 48 and 45, but I doubt it. I doubt it. If we end up down here at 47.8, again, this is the 24-hour version of the weekly high, the prior week high. So if you get around that 47.8, be careful tomorrow morning because, again, it's a dotted line on my chart, so be careful, okay? So the plan right now in the Russell, I could buy right now, but I'm going to get stung if I buy right now. I'd like to wait for price to pull back. I'd like to get in around 53.4, but I can really get in as early as 54.7, 53.4. I would love to buy any of these support levels that I can see below me. If we don't pull all the way back, that's not a very big deal. Just make sure that you buy at a discount. Do not buy right here at the highs. If it keeps going higher, it's okay. Just wait for it to pull back. I always tell my students to get yourself into that cloud, right? That's kind of my rule of thumb. So if it doesn't pull back all the way to the 53.4, right? If we don't get it to pull back all the way and then go, that's okay, as long as I'm inside the cloud, right? Because if I'm above the cloud, I'm overbought. If I'm inside the cloud, for example, if we came down like right here and bounced off the 54.7, right, then that will be enough too, right? That'll be fine too. But again, I'm talking sweet spot. I want to buy that 53.4, 51.4, 48.9. And again, we're bullish here, so we're looking to be a buyer. Guys and gals, that does it here for me for the third week of the month of February. I hope you've enjoyed the newsletter this week. I would love to get your feedback. So do me a favor, send me some feedback. It's jj@schooloftrade.com, or just simply post some comments below the video this evening. And I would love to know, what do you like? What do you hate? What do you want to see more? Do you want to see less of something? Let me know how I can make this newsletter better for you every single day. From the entire team here at School of Trade headquarters in Los Angeles, California, it hasn't snowed here yet. Probably the only place on the planet it seems like it hasn't been snowing. We've had a pretty nice weather here in LA. Signing off for now. You guys have a great weekend. I do these newsletters Monday through Thursday. If you want updated information, come see me tomorrow morning in the trade room. We open the trade room tomorrow at 8 a.m. Eastern Time. Don't forget to learn it so you can earn it. And we'll see you guys either tomorrow morning as a student in my trade room or Monday evening for our next newsletter at 8 p.m. Eastern Time. Adios, amigos. Bye-bye for now.